you guys will see that most of the year, because this is what 2022, so this is the beginning of the year. So you're gonna see most of the year, you see this red area, or a good portion of the year, because the year's not over too, we've been trading underneath 26. So understand this, the VIX measures volatility. So when the VIX is up, option premium is high. Options are more expensive. If you have them, they can move more, right? But when the VIX is low, preferably under 20, or really, that's like really low, but like under 25, I'll say, right? That's when options tend to be cheaper. So the last couple of months, as the market has been, rallying, options have become cheaper. Because at the end of the day, what this VIX is, it's a ratio between calls and puts in the whole market. So people have been buying less puts, but now there's starting to be more random spikes. You see, we're getting over the 200. Maybe we might start getting to high volatility again. When volatility gets high, the market is different. Do you guys remember how it was back in June? Or even, beginning of June, May, April. I don't know if you guys remember, but like the market was moving so crazy that like, it's like if you bought an option, you wasn't making as much money per move. Does that make sense to you guys? Anybody could relate? Talk to me, y'all. Anybody? Anybody was trading during these times? Not really. All right. So, yeah. Anybody?
I wasn't.
Yeah, I was
a little bit.
Go ahead.
Go ahead. You can speak. One of you guys.
I was driving, bro. That's why I had to unmute myself.
Oh.
But yeah, I was going through it right with you. Super big old move, and it go up $5. So yeah, I remember those times for sure.
So remember, the market today is different from the market tomorrow, and it keeps changing. And if you're not changing, you can get stuck doing old things that don't work no more. So the main thing is we got used from July in a low volatility environment, and that might have spoiled some traders because now we're going to go back to high volatility where things are going to get crazy again. So what I would recommend is right now is a good time to start buying options with time that can take advantage of some of this future volatility. So let's get into the plays. All right, so let me go back. So I got, so the plays I want to watch really is, I keep it really simple. So UUP, that's the way to play the dollar, but the real dollar index is the DXY. UUP is just an ETF that tracks it. I'll say actual dollar index. All right. Oil, and oil is an easy play. As a matter of fact, let me show you guys something, especially you guys that have been with me for a couple of months. CX. All right, oil. All right, we're gonna get into oil right now. All right, but first I'm gonna show you guys this right here. So some of you guys are part of my coffee and stuff like that, but like this is my coffee page, and this is where I have a lot of my plays and stuff that I drop, call outs, options, so this is an old one back in November 8th, right? So this is MRO, this is an oil play that I had shared. And as you can see back, price was $17, but we can just look at the date. This is November 8th. So back in November 8th, I called the MRO, and I said that the monthly chart looks very strong. We already hit double bottom on the monthly, and this is a stock that came down a lot, reclaimed the last liquidity from the lower areas, made new lows, and from there we were just building. And if you guys see this like staircase type of formation inside a channel, that's a very healthy growth. When stocks just go straight up, they go straight down too. Like right here, you see it's unhealthy, but when it's like that in a staircase, it's a healthy growth. So that's why I called it out, and I said that double bottom at 360. I talked about divergence on the RSI. It was diverging. If you peep Sid, I don't know if you remember this, Sid, but we definitely charted this one. And then the ATR was moving about $1.27 a week. But
yeah,
Yeah, I put some time on it. So I called out. So let's look at some of these options. Because mind you, they're about to expire like in coming weeks. So back then, the $30 call, September 16 was $59. The November 26, 17.5 call was 53. Let's look at what they are now, and they've probably been all over the place. But actually, let's look at both. So I'm gonna go to TD, and I'm gonna pull these up. So I did sell them. I didn't hold them all this time, but I did make my profits. If you were wondering, so MRO $30 call September 16th. We'll look at that one first. MRO $30 September 16th right here, and it's gonna be a $30 call. So right now, oil is down right now. So it's actually down right now. But let's look at where it's been. Copy. I'm gonna send it to here so I can watch it. Paste. And then now let's look at where it's been and how much profit you could have made off this. Let's go on the 1 year, 1 day. So as you guys can see, back in May, the option that was $39 was $570. You guys see that?
Yeah.
So mind you, I didn't wait. I probably sold it by here. I'm pretty sure I sold it by here. But still, to buy at 39 and sell for 200, 300, or even if you were patient enough to hold to 500, that's a crazy return on an option that you get to hold for months on end, where you don't worry about it's going down today, it's going up today. So this is the power of long-term options and leaps. At the time, it was a leap. It had like about a year expiration on it.
Are these like you can put in a sell for like 6 months?
Yeah, because you choose expiration. Because mind you, it expired September 16th. When did I post it? November 10th, something like that. So November. So that's many months in advance, and it's only because I seen early activity on a larger time frame. I was looking at the monthly chart. Does that make sense?
Yeah.
So let me